with respect to non-performing assets and willful defaulters. We're now given to understand that RBI has directed banks and bank boards to proactively settle willful default. Essentially, Karthik, asking them to take responsibility of every time they're lending to someone and that person is either unable to pay back because they don't have the funds or they willfully default. So banks are now supposed to be more responsible as opposed to what it was earlier, which is you pass on your NPAs back to RBI, RBI has to deal with it. So banks there have to now prop up and ensure that they are taking proactive measures to only lend to people who are credible. If I were to say
I
that.
read it slightly differently, Shweta. While, of course, what you're saying is part of the requirement, I think in addition to that, what I read into this news item is that RBI is now asking bank boards to lay out very, very clear policies on how they will deal with deemed willful defaulters.
Okay.
So, up until now, the understanding was that, hey, there is an NPA, a non-performing asset. What is a non-performing asset? Let's break it down. I've gone to a bank, I've taken a huge loan for my business, let's say. I say business because usually the volume of that loan is larger, but it could also be in the case of personal loans. But let's say I take a business loan, a fairly large quantum of business loan, and I receive it and I deploy it somewhere. Now, if it's a 20-year, 30-year loan, 5 years later, I realize I don't have the wherewithal to pay it off. Now, up until now, what used to happen was that after a lot of nudging, a lot of coaxing, a lot of coercive action that banks would take, eventually it would reach a position of stalemate, where the bank would go to court or I would go to court or the bank would take me, drag me to court and say, hey, here is this guy and he has defaulted on a large loan. Court, please tell me what needs to be done. Right. And then it would become the court's headache looking at the contracts, looking at, what kind of mortgages I had made. And we've seen enough of these cases, and headlining cases from Vijay Mallya to Nirav Modi to whoever not, right? So, so what really happened back then was that this would stay in a condition of stalemate. It would still reflect on the assets component of the bank's balance sheet because this was unrealized return of loan, and it would continue to be on the bank's books for a very long time. Now, the RBI has told bank boards to proactively draft out very clear, very stringent policies on how they will deal with a situation like this at the bank board level, not necessarily at the level of RBI or the court, and understand whether the bank decides to go in for a compromise settlement, in which case, I took, let's say, 500 crores, I'm able to pay 100 crores back. Would the bank rather realize that 100 crore rupees and forego the 400 crores or not even take this 100 crores and keep fighting in the court, right? And the second component, one being compromise settlements, the second being a technical write-off, where I decide, hey, okay, I've had enough, I'll possibly end up spending more time, effort, money dealing with continuous hearings of court, so let me just write it off and move on with life, right? So I think a very clear mandated policy framework to be worked out at the board level of individual banks is what RBI is mandating.
Okay. Something that stood out for me as I was pointing out right before the show is that for the very first time, RBI is hinting at compromise norms. Essentially, prior to this, RBI would or the central bank would ask banks to take the lender or the borrower for that matter to court. Ask the lender to take the borrower to court to settle it out, to ensure they're either punished or you get the money back. In most cases, even in case of Vijay Mallya was ready to pay back, but the idea here was to punish him for the fact that he did not pay back, did not meet the obligations. But for the very first time, we're looking at compromising here, which I think augurs well for the banks too.
I think, again, it'll depend on a case-to-case basis. It'll clearly depend on the quantum of loan, on the quantum of compromise. But yeah, the fact that compromise is on the table now means that there would be headway instead of a stalemate.
Okay.
So that, depending, again, it's going to be a case-on-case situation, but bank boards will have to take responsibility now, given the policy framework that they write down and communicate to the lenders, that if the lender was to default, and if the lender being, let's say, a willful defaulter, where the bank feels that the lender has the wherewithal to pay, but is playing truant and doesn't want to pay, and hence becomes a willful becomes a willful defaulter, then what are the avenues available for the
Right.
bank to deal with that situation?
Okay.
And laying that down as a clear-cut policy framework is what this new move is.
Much needed there.
Much needed, for
Much
sure.
needed. Krishna, it's not just an economic story, it's also a political story. And I want to take you back to 2014, before which there was this huge conversation debate around NPAs. I mean, every layperson who did not really could define NPA was
Knew what it was.
was talking about NPAs. They knew that this is a problem. Essentially, a group of people who have the capacity to pay back were not paying back. This was the common understanding in a non-economic parlance. A group of people powerful enough to get heavy loans from banks and mortgage very little back to the bank, were able to get huge sums of loan, were not able to pay back, would flee off the country, and then you would have the Interpol, the police, and the entire media. It was a circus of sorts. But for the very first time now, we are looking at some sort of norms to be put in place for banks to settle with willful defaulters. I think it really augurs well.
Right, and since you gave the snapshot of history of NPA in this country, which which broke into common parlance headlines in 2014. Yes, absolutely. And the question that was often asked was, we take a 1 lakh rupee loan, we can't give it back. They send people over to our house. How come multiple crores, lakhs of crores worth of loans and nothing is happening? So finally, something has happened, Shweta. And in this case, I view this as one very simple thing, that the onus is now being put fully on the banks when it comes to NPAs, because it's like, the government and the RBI telling the banks, saying that don't let your NPAs grow to a size where it's completely unmanageable. And then the onus is on us, the government, the authorities and the RBI, to make sure no banks fail, because you can't let banks fail because of any reason, leave alone NPAs. You can't allow banks to fail in this country or in fact anywhere else in the world. In fact, so that kind of a mentality is what sets in once the NPAs go to a point where it's unmanageable. The bank can't do anything, nobody can do anything, then it gets taken over, moratorium is issued, blah, 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 blah. But right now, what's happening, I view this as that. Let's not get to that stage. Let's nip things right in the bud. And the onus is being put on banks and bank managements to make sure they have checks and balances, clear-cut, defined, concise policies with regards to NPAs or non-performing assets or loans that they are giving out to people. How, on what basis are you going to give out loans? How are you going to review it? When does it become an NPA, and when does it get completely taken off your books as an NPA as well? All of these things will have to be part of the policy that banks have to make. So in that sense, we've seen the fact that, be it the PNB scam or most of the bank scams, it's the bank authorities, the bank officials, the bank individuals who are circumventing rules, who are doing things to ensure a fraud happens eventually. So at the end of the day, and then they ask questions about from the government, from the state government, central government, RBI, authorities, blah 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 blah. Right now, the way this is given, clear settlements, write-offs, NPAs. The bank creates a policy and sticks to it. If the bank doesn't stick to it, it's a corporate governance issue. So it's the bank's fault squarely. So this is all about appropriating responsibility and final blame as well, Shweta.
Okay. NPA still continues to be a major problem. From what I'm looking at, Karthik, loans worth 10 lakh crore have been written off in the last 5 years. Essentially, this is all NPA. This is what the bank has decided. We're not going to get it back, so might as well write it off our books. Right. And I want to understand at this point in time, what is leading to these either increased or stagnancy in NPAs? Do you think we've been able to curb the problem?
No, in fact, NPAs have only come down from my
So we've been able to curb the problem.
We've been able to curb the problem to a great extent. And this is the whole sort of, banking regulation and the whole revival of the banking sector, which the RBI has done very hawkishly over the last 5-6 years, maybe more. And this whole rejuvenation of the banking sector and the success story that India's banking sector has compared to its peers across the world rests on this sole instrument where we have been able to tackle with this menace of cleaning up of bank books and dealing with NPAs fairly efficiently. So I think this latest move by the RBI further strengthens that. And this time the RBI is coming out and saying very clearly that a willful default on the books of a particular bank is the bank's headache. It is not the court's headache, it is not the RBI's headache, and I think also sort of, nudging banks to believe that they may not have a big brother to fall back on, and if they are dealing with a NPA-like situation, it is going to reflect on their books and their books alone, and perhaps giving a signal that taxpayers may not continue to be responsible to add the green bucks back to your books.
Right. So just two quick things that I want to ask or clarify at this moment. Writing off bad loan does not mean NPAs are coming down, does it? I mean, essentially, NPAs could just be there. We continue to write them off and they could still be growing. So are we suggesting at this point in time that NPAs have also come down?
So technically, if you do more write-offs, more writing off of your NPAs. Now, what are NPAs? If you look at how books of finance are written.
How does it become an NPA? For the viewers who want to understand how does a loan become an NPA?
Happens? Where does this particular component of a loan that you have issued as a bank figure out on your books of accounts? It's a balance sheet and a cash flow issue. It's not a P&L issue, right? Now, what happens is you give 1 crore rupees worth of loan to somebody, right? There's a cash out of 1 crore rupees. That cash goes from your cash flow statement, right? But this 1 CR and some interest is going to come back to you at some point. So it becomes an asset for you in your balance sheet, right? It's an asset which you can claim back. So it'll continue to be an asset for you. But the interest that you get on that goes back to the profit and loss statement.
Right.
That is income from assets, interest from assets. That goes into your profit and loss statement. Now, when you write off an NPA, what happens is the value of your asset goes down. The 1 crore gets wiped off from your asset. But this 1 CR now becomes a problem for you because this becomes a P&L issue. Right.
So it's a loss.
Overall, it becomes a loss for the bank.
Okay.
So if bank losses were mounting and NPAs were coming down, it would have been a little more obvious that you're writing off NPAs and hence, you're just writing them off for the sake of glorifying your books. But since banks' profitabilities, especially PSUs, are also rising and NPAs are reducing, I think overall the situation is a little better.
It's getting better. And for the sake of people, what is the difference between a willful defaulter and simply a defaulter? Let's say I were to be taking a loan of 1 crore. If I were not to be able to pay it back, I would not be deemed as a willful defaulter if I still have assets that I can mortgage to pay back that loan. So essentially, willful default is partly also a bank's problem, not thoroughly going through the mortgage, perhaps tinkering with what my ability to pay back. What do I have to pay back in return? Do I have enough property? Do I have enough sort of, physical property to whatever assets do I have, whether they can be liquidated to pay back for the loan that I have given or not. So essentially, all in all, it's looking good right now as far as policy framework for bad loans is concerned, because remember, as Karthik pointed out beautifully there, it's not just the losses that are mounting and NPAs that are going down, it's also the PSUs specifically are making more money and NPAs are also reducing. From here on, it will be banks' responsibility to come up with a framework in order to write off or compromise with a non-performing asset. So we'll have to wait and watch out for more details.
There's one little glitch there, Shweta, that I think we must point out. The glitch being that it has become, over the last 5-6 years, in this drive to clean up books, in this drive to reduce NPAs, it has become increasingly difficult for small and medium enterprises to take bank loans. And I think that difficulty will only rise further.
Okay.
So that becomes one glitch, and hence there are more expensive loans that small and medium enterprises are taking from outside of the banking sector and paying a much higher yield on that loan, a much higher interest on that loan to keep businesses flourishing. So, it cuts both ways. While it is good for the overall banking story, while it is great for taxpayers overall that their money is not going to be used to clean up bank books, but for small medium enterprises, it becomes even more difficult now to attain these bank loans, because the policies that will be written are going to be written in a way that, you don't want to be caught napping in a situation where somebody has defaulted on a large loan.
Very stringent measures there for small medium enterprises. That does not augur well, because it's not very easy to get money that they require for their operations.